Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Jake Akers. He ran his own marketing firm in Atlanta for 7 years prior to transitioning into real estate. And since that time, he's been involved in over 250 residential and multifamily investment deals, totaling over $145 million. So thanks so much for coming on the show, Jake.
Yeah, Charles, thanks for having me.
So give us a little background on yourself, both personally and professionally, prior to getting involved in real estate investing and moving out to California.
For sure. Yeah, so originally I actually grew up on the East Coast, Hampton Roads, Norfolk, Virginia area. A lot of military in that area, so I get that question a lot being out here in San Diego. Was I in the military? No, I wasn't. I applied for the Coast Guard at one point in time, but didn't end up moving forward with it. But yeah, I grew up around military, a lot of watermen in that area. So just kind of surrounded by kind of that hardworking American type of atmosphere. My dad actually started a construction company or building residential houses when I was in high school. And so that really exposed me to a lot of different trades in the just the housing industry in general. And then after I graduated, I went to James Madison University in Harrisonburg, Virginia, kind of near Charlottesville, and went for a marketing degree. Didn't really know what I was going to do with it. I knew that, sales is a part of everything. And so being able to market myself would allow me to be successful in business in general. And during college, I did a few different internships in the construction field. One was in commercial real estate and one was in residential real estate. And then that eventually led me into having a job waiting for me right out of college as a project manager overseeing new homes under construction in the Williamsburg, Yorktown area of Virginia. So yeah, that's kind of how I first got going. And then I graduated in 2008. And we all kind of know what happened in the housing market and the economy during that time. So after about a year of being a project manager in residential housing, I got laid off from my position as a result of the housing crisis that was going on. So definitely a kind of a wake up call for me at that point in time in regards to, all right, where am I going to head from here? I didn't really know exactly what I was going to do, but the one thing that kind of really resonated with me was I knew I didn't want to be an employee for the rest of my life and have my future hanging in the balance of someone else's hands. So that's kind of what led me to looking for something a little bit more entrepreneurial. And so from there, I went into direct sales. I joined a company that did direct sales and essentially had a training program that led you to be able to open your own franchise after 1 to 2 years. And so that's the route that I took from there. And it kind of took me around the country. I lived in San Diego for a bit, Chicago, and then ultimately landed in Atlanta where I opened my own franchise at the time. And so that's where I ran my own marketing business for 7 years in Atlanta.
Nice. And so what was the deciding factor to get into real estate? I mean, you were in it prior, but as let's say more of an investment vehicle.
Yeah. So I, after leaving real estate in 2009, I was still passionate about it. I just, like I said, I knew I wanted to be my own boss and learn more about running and managing a business. I'd already learned a decent amount about real estate itself, but I didn't feel like I was an expert at being my own boss and running a business per se. So while running my marketing business, I always knew eventually I wanted to get back into real estate. And why I definitely saw a lot of people making a lot of good money, during those years that
Mhm.
I was not in real estate, from the 2010s to 2015, 16. That's when I started to get that I don't know, that jealousy of, okay, I need to get back into this industry. There's a lot of people making a lot of good money here, and that's really kind of what attracted me to get back into it.
Nice. And when you got back into it, what kind of path of real estate investing did you take? Like, what were you doing?
Yep. So that's when I relocated from Atlanta back out to San Diego, California.
Mhm.
And initially, I got into residential. I was an acquisitions manager for a residential fix and flip company.
Mhm.
So I was going out, building relationships with agents, finding off market deals that we could flip ourselves. And then from there, I started my own wholesaling, where
Mhm.
for people who don't know what wholesaling is, it's getting a property under contract and then selling that contract to someone else that wants to do the actual work. So that was kind of the route that I went from there, and then eventually just kept evolving into what I'm doing now.
Nice. So your company currently employs like a very unique investment strategy of co-living and co-working properties. Can you explain what this asset class is and why you love this firm or why you love this niche and why you guys really focus on it with your firm?
Yeah, so there's several companies out there that do co-living type
Mhm.
of properties, hostel, high-end hostel
Mhm.
uh, type of niche. There's also a lot of companies that do co-working properties. WeWork being one of the biggest ones, but there's several others that emulate that model as well. But there's not many that do both combined. And so that was part of the attraction that we had in mind when putting this together, was kind of taking the best of both worlds of the co-working and the co-living. And essentially, when it comes to what drew us to the niche, when it with COVID, for example, that really pushed a lot of people into the remote work industry, or the asset of remote work. And so we wanted to really cater to that growing demographic, and that's really what drew us into it. um, there's a lot of people that were dissatisfied with the seclusion and the loneliness of working remotely, and so being able to cater to that and bring an environment that creates community and collaboration was really kind of where our mindset was. So what we do is we purchase multi-unit properties. Typically 6 to 20 bedrooms is the size that we're in right now, and then we'll add co-working space throughout, and also add different type of communal areas, and then we'll rent out those rooms short to mid-term. So essentially, it's kind of like Airbnb meets
Mhm.
WeWork is the vibe that we're going for.
Oh, that's very unique. When you're, I mean, I want to get into more of kind of like the marketing and how this all works, but just like before we get into that, I want to talk more because COVID brought in it amplified a lot of things and brought in, like, I guess you would say, new fads, and it amplified things that people weren't really focused on prior. And one stat I pulled up was that, RV deliveries being down 36% from 2021. So, I mean, it goes to show you that there's some things that just go in fads. And what I'm asking is, why do you believe this asset class to not be a fad? You guys are doing many projects with them. You're having success with them. Why do you think it will continue, that people are not going to really be going back to the office as much? I mean, we know everything that goes on around there, but like they're going to still have a need for these properties that you guys are renovating, building?
Yeah, well, there was already a growing trend to remote work pre-COVID, just as a result for longer commute times, higher gas prices, um, increased prices for home, home care, daycare, and just technology advances like Zoom and Skype and different type of platforms like that really enabled people to work remotely. So I think the pandemic just accelerated the movement
Mhm.
towards remote work as opposed to causing a need for it. And so as a result of COVID, I think a lot of companies are realizing that they can operate at a lower fixed cost by having less or even no office space while still maintaining a high level of productivity. And Upwork is a pretty large reputable company. They've been doing a study over the past several years, really honing in on this segment. But they noted that 56% of companies globally are offering hybrid or fully remote
Yeah.
work, and that more and more roles and positions are starting to shift to the remote work model. It's not just people in the tech industry per se. And so they're predicting that by 2028, 73% of all departments, so whether it be sales, marketing, HR, you name it, project management, 73% of all departments, they're expecting to have some type of remote workers involved. So
Yeah.
I think it's here to stay. Granted, there will be some companies that are bringing people back to the office more. My wife is an example of that. She was working completely remotely. Now she's on a hybrid where she goes into the office 2 days a week. But there's a lot of companies, I think, that it's that type of approach is here to stay.
Yeah. No, I just wanted to kind of clarify that for listeners that might write off this asset class without really digging into it. Because I feel over the last decade or two, the U.S. economy as a whole has been moving toward more contractors, away from a lot of employees. I just little by little bring in contractors and outsourcing a lot more. And then COVID came around, and now it's like now you're working outside the office, and now you're kind of, like you said, Upwork. So these are freelancer contractors that are, leaving, or they work full time for a job that they're completely remote with. So it's great to be able to cover all those bases. One thing though that kind of struck me interesting, because I've never looked into this before, was that what kind of financing are you guys getting for projects when they're coming in? So you used the example before of 6 to 20 bedrooms or beds. I believe it was that you said. And, what kind of financing do you get for these projects? And is this kind of a government financing, or are you going through local banks like to do this, or how does that work?
Yeah, we've been using local banks for
Mhm.
for the first several projects that we've done, just conventional mortgages, and and we've done that to finance the majority of the
Mhm.
purchase price, and then we've raised capital for a portion. Recently, we're doing projects down in Cabo, Mexico, where
Mhm.
you can get a lot more bang for your buck when it comes to price point wise. And so to help combat the increasing interest rates, we've we've just raised more capital for those and purchased those properties all cash. So it
Mhm.
really depends on the market and what we can get and the type of deal we can get. But yeah, these properties that we're buying are financeable when it comes to conventional loans.
Nice. So once a project is completed, you kind of touched on this a few minutes ago. How are the properties really marketed? And like, I mean, you're fully furnishing these. How these people are staying, I take it, you said short to midterm. So I imagine like from 1 week to 3 or 4 months. Is that correct?
Correct. Yeah. So when it comes to the average length of stay, we're seeing about 10 to 12 days is the average stay.
Mhm.
We have some people that want to stay for a whole month or more. We do cap our nightly stays at 29 days. And the reason being for that, especially being coming from California, just with the pandemic and all the landlord tenant regulations. So we cap it at 29 days. That way, we're not moving into the landlord tenant regulations that you would typically see. If someone wanted to rebook for another 29 days, they could. But Yeah, that's typically what we're seeing in regards to length of stay. It's a longer stay than your average short-term rental where people are
Hmm.
looking for weekend stays. A lot of our guests that are coming through are business travelers, digital nomads, remote workers that are looking for something new, where they want to get out of the house, or just go stay somewhere unique for a couple weeks, and you break up the monotony of working out of their spare bedroom or their
Yeah.
kitchen. So that's generally what we've been seeing in regards to the types of stays. When it comes to marketing, we've been solely using Airbnb up to this point thus far. They've dumped a lot of resources into that platform when it comes to the marketing aspect, when it comes to payment processing. So the booking aspect of it. So that's what we've utilized thus far. Maybe down the road, once we have a larger portfolio, we might bring some of those services in-house. But for the time being, it's just way easier to pay a little bit extra to them, per night for those services. And then we'll hire a local property management team whenever we open up a new property to handle the maintenance, the cleaning, and anything that needs to be done in between stays. So we'll have on-site property management locally, and then we have Airbnb to handle everything remotely from there.
Yeah, that's great, because that's the one thing I've always wondered about, is with Airbnb is having the people, the handymen, the cleaning people there to do it. And now that you have that, your price and hassles have been really minimized, because there's not a question of who's going to clean that, have they showed up, whatever. And then Airbnb is strictly a marketing platform. Before you do one of these deals, I imagine I've heard horror stories from people doing short-term rentals or whatever, where a city has capped out so many different of these short-term rentals or whatever this is. Do you fit in that because you're doing longer, or is it still considered short-term because you're keeping it in these areas that, let's say, are more tenant friendly? You're keeping the stays 29 days or less.
Great question. So we're still considered short-term rentals because it's less than 30 days. Typically, once you get to over 30 days, now you're looking at midterm rental.
Mhm.
And so those types of stays don't fall under the category. But our approach to getting around that is the properties that we purchase are already designated as SRO, or single room occupancy.
Mm.
So whether that be a boarding house or a bed and breakfast or a small motel hotel, there's a lot of different types of properties that can fit in
Mm.
to this asset class that we're looking at. But in markets where the legislation is highly regulated when it comes to short-term rentals, we look for those types of properties, SROs.
Interesting. And one
Yeah.
other question. Yeah, one other question you mentioned, just as it's so new to me, I just have questions about how this works. So, for instance, if someone, well, what is like you to 10 to 12 days is your normal renter that comes in there into one of your properties. And for me, if I'm multifamily investor, would probably say an optimal rental is 24 months. Somebody renews, they stay in there, because now you're cutting down on the downtime. The unit doesn't produce rent, the make ready, all this kind of stuff I don't have to do if they renew. For you, what do you find, or for this asset class, what do you find to be really the best time that someone stays there between someone else coming in, where you can, let's say, maximize everything, profits, the whole 9 yards? Is it 5 days? Is it 10 days? Would you rather have someone there for 3 weeks? I mean, what do you kind of shoot for or hope for?
Yeah, the longer the stay, the better for us, because
Mhm.
just like you were mentioning, that's less turnover when it comes to cleaning and maintenance. So the longer the stay, the better for us. The closer to 3 to 4 weeks we can get, then the more ideal that would be. People get more familiar with the property as well, and the big thing for these properties is that sense of community and collaboration. So the longer people are there, the better relationships that they're building, the more comfortable they're getting with the area and the city too. So I think it just creates for a better experience in general. So yeah, the longer the better, up to 29 days.
Yeah, no, that's great. And is that going to be, that's just obviously where you are now in California? I imagine Cabo, I don't know anything about Cabo, Mexico, eviction laws. But will they be longer in these places that maybe are in different areas?
Yep, exactly.
Okay.
So that was part of our attraction
Nice.
down
Yeah.
to Mexico was less regulation when it
Mhm.
comes to just short-term rentals. So we aren't capped at that 29-day mark. Uh, Price point down there, we could get a lot more bang for our buck, but there's also just a huge draw of remote workers going down
Yeah.
to Mexico, Cabo specifically in particular, based on cost of living down there, the weather, all that good stuff. So we definitely put a lot of due diligence into looking at different cities there or in Mexico before pulling the trigger on one. And so we have two that we're working on now in Cabo, and then we're starting to consider Costa Rica, Puerto Rico, other more Americanized types of markets like that may be not continental U.S., but we'll also continue to expand here domestically as well.
Yeah, that's great. I remember Cabo like 10 years ago, and there was so many people from California there. It was like being in South Florida, so many people from New York. So,
It
but
really is. You go
yeah,
to a restaurant and one side of the menu is English, one side Spanish. It's very easy to get
yeah,
around down there
yeah.
as a US citizen, and a lot of Canadians down there as
Yes.
well. So and the government in Mexico has made it very appealing for international investment, both US and Canadian, to come down, sink money into the area and help build up their infrastructure. So that was another attractive aspect of that area, was just how easy they're making it for international investors to come in.
Nice. So, Jake, kind of as we finish up here, some of the questions that we ask every guest. What do you think are some of the common mistakes that you've seen over the years from being in so many different facets of real estate investing? Common mistakes that you see real estate investors make?
I'd probably say one of the biggest ones is I just see a lot of people give up or get out of the game when they run into hurdles. And that's kind of the nature of real estate, is there's always going to be market shifts and curveballs that come your way. And so I think that's one of the biggest differences between those that succeed and those that don't, is the ones that succeed, they pivot, right? They adapt, they adjust, and they continue to push through.
Interesting. Over the many years, you said, of going through 2008, 2009, as I did as a real estate investor, being involved with real estate, and now to where you are, how has your relationship towards money changed over those years?
Yeah, that's a really good question. I think, growing up where I did, around a lot of blue collar type of workers in community in general, I used to work for money, chasing a
Hmm.
paycheck, just needing that money to pay bills, and anything extra go towards fun spending. But over the years since then, I've learned, after being more involved in real estate, I've learned to flip the script, so to speak, and to put my money to work for me by purchasing assets that generate more income. So that's essentially what's led me to my role right now with Homework, is that my number one priority is helping others to invest into cash flowing real estate by becoming limited partners in our projects. And so that's what creates completely passive income stream for them.
So tell us about that. How can our listeners learn more about your projects, your business, and get in contact with you?
Yeah. So our website is homework.com, and that is without the E. So HOMWORK.com. My email is jake@homework.com. We also created a website, passiveretirement.com, which is a little bit more on the educational side when it comes to learning about uh, passive investing in general, as opposed to just our niche of co-working, co-living. So that's something we're looking to build out and to grow over the years, is financial education through real estate, and helping people to retire passively by putting their money to work for themselves.
Yeah, that's great. I was reading over both of those websites prior to this interview. So there's a lot of great information there, and it really explains, gives you a really good foundation for learning more about co-living and how this can be a great part to addition, I guess you'd say, to anybody's real estate portfolio.
Yeah. Yeah, for sure. And that's anybody that has questions about our asset class or just about investing in real estate in general. I'm more than happy to share my experience, my pitfalls, the learning curves that I had along the way, because that's essentially what helped me to get to where I'm at now, is other people sharing their time with me.
Well, thank you so much for coming on today, and looking forward to connecting with you here in the near future, Jake.
Yeah, I appreciate you having me.
Have a great rest of your day.
All right, you too.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.